Welcome, dear traders. You're watching a recap of the Asian session. Wall Street extended its losing streak that began yesterday. In Australia and Japan, shares of companies from tech, car, finance, mining and other sectors dropped as well. The yield of US government bonds with different maturity dates advanced. The US dollar reached its highs again. All three US stock indexes dropped at Thursday's close after the publication of the Producer Price Index. As we forecast yesterday, the reading failed to meet expectations. Prices for final goods did not decrease. On the contrary, instead of a modest growth of 0.4%, they jumped to 0.7%. Before the long weekend, several Fed policymakers made hawkish statements. Loretta Master and James Bullard said that the Fed could hike the rate by 50 basis points at the next meeting on March 22. As the CME FEDWATCH tool shows, the Fed funds futures market reacted sharply to these comments. Earlier, the majority of traders were betting on a 25 basis point rate increase, and today 18% of investors have priced in a 50 basis point rate hike scenario. The situation may change drastically again today. In the American session, Thomas Parkin and Michael Bowman will deliver speeches. If the tone of the speeches is hawkish, it may stimulate a further rise in the US dollar. Given its high liquidity, the US currency is still the most popular safe haven asset. Besides, the latest macroeconomic reports, such as the price indexes and the labor market data, showed that the US economy is very resilient. Therefore, the US dollar index jumped against its main rivals amid expectations of aggressive rate hikes. On a Friday, the greenback reached its 6-week high and rose to 104.50. It's likely to end the third week in a row with gains. Since Monday, it has already climbed by about 1%. In the Asian session, it was trading in the upward range of 104.20 and 104.50. However, it could advance higher against the backdrop of fresh remarks from the Fed officials. Investors should also keep in mind Jerome Powell's warnings. After the February meeting, he said that the regulator would try to avoid the mistakes of the past. It means that the Fed would prefer a more aggressive strategy to finally cap inflation rather than taking a pause. If it starts easing policy too early, it will have to start from scratch. This is why the regulator is likely to remain hawkish. Meanwhile, analysts believe that the Bank of Japan will hardly change its stance in the long term, no matter how hawkish the new governor could be, Katsuo Ueda, or someone else. The monetary policy settings will remain the same. The Bank of Japan voted unanimously to maintain ultra-low interest rates. The regulator could take additional measures to relax control on the yield curve of the government bonds if needed and without hesitation. Before that, the yen managed to withstand the US dollar pressure. However, the dollar-yen pair rose sharply once again after the Bank of Japan's dovish comments. The pair soared to its January high of 134.80 due to discrepancies in the key rates between the Fed and the Bank of Japan, a rally of the greenback and the growing yield of the US Treasuries. In the Asian session, the pair made an attempt to test the resistance level of 135. It was trading in the price corridor of 133.90 and 134.90. Given the current situation, the yen may continue to depreciate versus a strong US dollar, especially today in the American session. Bulls may try to push it above the 2023 opening range to the key resistance level of 136.90. At this level, the 200-day moving average is located, which covers approximately 40 trading weeks on the dollar-yen pair. The Australian dollar also sank to new lows in the morning. The AUD-USD pair was trading the price Canada of 0.6828. However, the bears are not going to take a break today, so the pair slid in the range of 0.6822 and 0.6882. The bearish trend and the consolidation at the multi-day low may lead to a further fall to 0.6805. On the top of that, the US dollar exerts extra pressure on commodity currencies. Nevertheless, it will be hard for bears to push the pair below the support level of 0.68. If they fail, the Aussie may recover a little bit. The New Zealand dollar will hardly be able to rebound in the near future. Besides, the central bank is likely to take a pause in a monetary tightening after the devastating cyclone Gabrielle. The next meeting will be held next week on February 22, and the Kiwi could end its fourth week in a row with a decline. The NZD-USD pair fell to 0.6204, moving in the bearish corridor of 0.6199 and 0.6266. Today, the pair may test 0.6185, which is the 200-day moving average. In the American session, the trajectory of some currencies may change, so you should be cautious today. That's all for now. Please leave your comment down below, subscribe to our channel, and have the latest market news at your fingertips with us. See you soon.